Good morning to everyone and welcome to Union Bank's financial results announcement for the third quarter ended December 31, 2024. Thank you for joining us today, and I'm sure that all of you would have had an opportunity to review our results and form an opinion. We are navigating, let me start with a little of the context that we want to give you, that we are, surely all of us are aware that we are navigating through a challenging macroeconomic landscape characterized by tight liquidity concern, but we are also happy that RBI did a little bit of activity yesterday to ease out the stress, moderating urban demand, uncertainty arising from global developments, volatility in the Indian rupee, and capital outflows. These factors are, of course, exerting pressure on the banking industry. However, positive developments such as the recovery in the rural demand, higher agriculture growth, and a little bit of gradual easing of inflationary pressures are expected to support the economic growth in the country. All of us are looking towards Viksit Bharat for 2047, and a lot of things needs to be done by all of us. So let me just take you through the bank's performance for the quarter ended December 24. We remain steadfast in our commitment to sustainable growth with a balanced focus on top line and bottom line performance. Our strategy prioritizes profitability and operational efficiency rather than aggressive growth. The bank delivered a strong performance in key areas such as asset quality, capital adequacy, and profitability, ensuring long-term value for all stakeholders. Now, let me just give you the financial highlights for Q3 FY25. Net profit reached 4,704 crore, marking a 28.2% year-on-year growth, the highest quarterly net profit in the history of our bank. For the 9 months ended December 2024, net profit stood at 13,000 crores, registering a growth of 25.8% growth year-on-year compared to the full year FY24 profit of 13,648 crore. Return on assets improved to 1.3%. ROE reached 17.75%, CAR stood at 16.72%, CET1 ratio at 13.59% as of December 2024. Now, as regards asset quality, gross NPA reduced by 98 bips YOY to 3.85%, net NPA improved by 26 bips to 0.82%, PCR increased by 88 bips to 93.42%. Credit cost stood at 63 bips and the slippage ratio improved to 89 bips. Now let's go to the guidance what we had given to the market at the beginning of the year and where we are as per the guidance. While profitability and asset quality metrics remain in line with our expectations, there has been a moderation in the business growth during the last quarter. This is largely due to the conscious decision that the bank has taken to cut high cost bulk deposits, which impacted terminal growth numbers. As a result, deposit growth has moderated to 3.8%, leading to a slower pace of growth in the advances, that is at 5.9%. However, in terms of if you look at the averages both in deposits and advances, the average numbers have grown sustainably. Year on year, we have seen a growth of 7.6% and 10.9% in deposits and advances respectively, reflecting the resilience in our business expansion. We now anticipate achieving growth closer to the lower end of the guidance range that we had given. We just keep our fingers crossed and see that we will, of course, reach those numbers. Now, other highlights that I want to give you for quarter is NIM for the 9 month ended December 2024 stood at 2.94%, well within our guidance range of 2.8 to 3%. On a QoQ basis also, NIM improved by 1 basis point. GNPA currently at 3.85%, already is below 4%, which was our guidance. Slippages and recoveries, gross slippages for the 9 months stood at 9,506 crores, and net slippages, if you look at, it is about 8,941 crores, while gross recoveries reached 10,800 crores, aligning with our annual guidance and demonstrating our commitment to maintain recoveries consistently higher than the slippages. I'll just give you a brief on the various significant developments that we have had during the quarter of December 2024. The bank opened 5 Nari Shakti branches in Bangalore, Chennai, Jaipur, Mumbai and Vijayawada on November 9, 2024. The Honorable Finance Minister opened these branches. These branches will not only support women entrepreneurs but provide tailored resources to foster growth and job creation. On our 106th Foundation Day, which we celebrated on 14th of November, we brought out many innovative initiatives like the Union Account, Current Account STP, Union Green Home Finance, Union CBDC Accessibility Initiative, that was one of the hallmark products for us for the visually challenged, and many other products that we have launched on that day. We have, as on date, added about 146 branches in the current financial year, taking the total branch network to 8,574. To honor the birth anniversary of our founder, Sri Seth Sitaram Podarji, we also opened a branch at Bissau in his birthplace. We have expanded our clientele by opening 32 lakh CASA accounts in the first 9 months of FY 2025, including about 2.5 lakh premier accounts. We have launched Ignite 2025, a HR initiative, and we drew a lot of HR talent from across the industry, whether it is private sector or public sector. To conclude, the bank remains steadfast in navigating challenges while delivering sustainable growth and value for stakeholders. With a focus on innovation, operational excellence, and customer-centric initiatives, we are confident in our ability to drive long-term success. Thank you, and I look forward to your questions. Yes, ma'am.
Hi, ma'am. This is Sydney from Reuters. I had a couple of questions. Want to understand from you, given that you explained about the macroeconomic conditions being volatile, one of the challenges that the banking sector faces right now is the stress in the MFI book. Want to understand from you, firstly, how is that book faring for you guys? Do you expect, the normalcy? When do you expect the normalcy to set in? After you answer this, I'll ask.
Okay, if I look at our bank, we have an exposure of just about 1,500 in the MFI books, and SMA is just close to about 5 crores, and that's about 0.35%, and there's no NPA in this book. We are not looking at any stress, and my MFI book, if you look at it, is in the MFR1. That's the range that it is in. So I am not seeing any volatility or any kind of a stress in my MFI books as on date.
Okay. Sorry, ma'am, I wanted to ask you about the retail wholesale mix that Union Bank would want to target. Given the fact that retail for all banks is kind of slowing, would you look to kind of increase the share of corporate advances on your book? How would that be?
Ma'am, if you look at the guidance that we had given earlier on, we looked at 45-55. 45 was my corporate book and 55 was my retail book. We would stand by that, and as the market is growing, we are not seeing much of the capex happening in the larger books, and if at all we are having something coming up, it is in the PSUs only. So I'm not looking at increasing that numbers, and as of now, we are not seeing any slowdown in the urban demand, though I mentioned that, but we are seeing some good growth in the rural segment. And so we will focus on retail segment during the current quarter also. as well as look at the corporate sector to give some muzzle to our growth in advances.
Okay. Also, the fact that your agri slippages have sort of increased QoQ, would you say that the impact was largely from a seasonal point of view, or do you think that's something
It
wider?
was nothing to do with the seasonality of the industry. We did the slippages was due to the restructured accounts. We had some repeated restructured accounts which was coming in, and we thought it prudent to slip those accounts, and then once it is slipped, we can give them a proper OTS to those agriculture customers, and then give them a new loan as per the RBI guidelines. So it was a conscious decision taken by the bank to clean up our restructured books and then go ahead and give them fresh loans too.
Okay. And one last question on your corporate book pipeline. Where does it stand, where it stands at the sanctions as well as the disbursements, if you could help the number?
Yeah.
Yeah, ma'am.
We have got about 60,000 crores actually. If you look at, the pending for the sanctions are close to about 75,000 crores, and pending for disbursement is around 36,000 crores. That is what we have got. And pending for disbursement is around 36,000. Pending for sanctions is around 39,000 crores. So we have got a good pipeline. Only thing is the market, the appetite of the our corporate customers has to considerably increase for them to take this loan. But anyway, we are getting good loans, especially in various sectors like road, energy, telecom, and renewables. There are various areas, EVs. These are some of the areas that we are getting a good number of proposals. We're just waiting that their appetite will grow and they will consume more from the banks.
But what about the pricing side? Does it continue to be competitive?
It is competitive, of course. There are various price lines like MCLR. We are only looking into the MCLR book. I am not looking into the other TBLR book or whatever it is. We are only sticking to MCLR book, and if I get a fair price on the MCLR, we are going ahead and doing it. Now, whatever I have told you on 75,000, it's all my MCLR book.
Oh, thank you.
Thank you very much. Yes.
Hi, ma'am. Shatra from Informs Media. Just a couple of questions. Your total business growth was very sluggish, but the CASA ratio has improved. So, are you being picky about lending and deposits to protect NIMs?
No, as I told you in the very beginning, that we are steadfast in having a sustainable growth and also the profit line. These are the two things I have to match. If I want to aggressively grow in business, and as I told you, though I have a very good pipeline on the corporate book, if the books are not, if the accounts are not giving at the right price, I'm not getting it. I'm not going ahead and giving those loans. So I am moderating between the two, and that is the numbers that's come out with. My profitability numbers are very good in that regard.
Ma'am, your LCR has also fallen by around 14 percentage points from a quarter ago. So, what impact are you seeing from the proposed RBI norms on your?
See, like any other bank, there will be about 10 to 11% impact on the LCR. But on an average, our LCR is about 130.61. That's an LCR that we are keeping. And regulatory requirements tell you to keep about 100%, but we are keeping about 130. If the new LCR guidelines come in, but there is a lot of debate going on in the industry with regard to the new LCR guidelines. As in, when it comes, there will be, of course, impact of about 10 to 11%. Thank you very much.
Yesterday, RBI came with a range of steps for liquidity improvement, not say liquidity. How exactly you look at it, and what really it means for your cost of funds and
No, actually, the RBI eased the little bit of liquidity pressures, and the stance in the October MPC also was like a neutral, and the December MPC also, if you look at, they reduced the CRR by about 50 bips. See, these are all auguring well for the banking industry actually, where we all understand that there is liquidity pressure, and the easing of these norms by the RBI has really worked well. In fact, in the morning when I was talking to the CGM of RBI, I told them that this is one thing, it's like a God-given gift to all of us, and the markets have also reacted very well with regard to the RBI stance that they have taken. And we hope that they continue. My CA will be able to answer what this will do for the economy as a whole. Yeah, Kanika.
So thank you, ma'am, for the opportunity. See, 3 points. First, signaling. If you see same period last year when we would be having this media conference, we as bankers would be complaining that while credit growth is strong, but deposit growth is low, and we were vying for liquidity from a structural point of view. Then a few quarters later, what we found is with Trump coming in, there were a lot of FX outflows from the system, and that also blew out some 5 lakh crores in a span of 3 months from liquidity. So we bankers were regularly going to RBI talking about liquidity concerns. Yesterday, if you look at RBI website, there are 2 press releases. First release says RBI governor met MD CEOs of banks, and second release says that RBI has given a spate of liquidity measures. So purely from signaling, it shows that RBI is listening to we bankers now. That's first. Second, the signaling is also showing that somewhere now, from monetary policy standpoint, which we expect, when we expect some heavy lifting to happen for growth. So when the governor came in, we talked about 3 areas of priority. First was rupee, partially addressed. Second was liquidity, addressed to a large extent after the measures yesterday. Now third comes rate. So it's like a precursor to a shallow rate cut cycle, probably starting next week itself when the RBI governor speaks for the first time on 7th of February. Last but not the least, now what we would look for is fiscal and monetary coordination. There's a budget on Saturday. We'll see what the government also does while they're committed to a fiscal roadmap in terms of growth stimulus measures. But just from liquidity standpoint, A, the clock channel is being partially unclogged by the regulator. We may need more. They may not be able to stop here. Second, when you start with monetary easing, the issue of CASA also may get may have some salutary effect because now you're moving from rate tightening to rate easing. That also may help. So all in all, RBI wants to give liquidity to have supportive conditions for credit in the coming quarters, and we hope to have a shift in that cycle for our bank as well. Thank you.
Keeping that in mind, you have said that you will try to look at lower end of your guidance.
Yes.
How challenging it is because the gap, if I look at it, what you have indicated and what you have, not the average, what is still the 9 months.
It is a challenge, of course. It's a challenge that we had said deposit growth would be in the range of 9 to 11, and we have achieved about only 9 months if you look at 3.8%, and credit growth at 11 to 13% is what we said, and we have achieved about 5.9%. If you look at it, looks challenging, but we are giving our best shot and to see that we achieve those numbers.
Advances would be around 11 if I look at the lower end.
Yes.
Deposits around
9, yes.
And on the NIM side,
NIM side, we said 2.8 to 3%. We will be able to keep those numbers. In fact, we are keeping in the range of 2.94 to 2.97. That's a number that we are looking at. So we will keep those numbers intact. We will not slip from the numbers that what we have today.
this factors in if there is a shallow rate cut cycle, that would also mean there is
We have, if you look at the whatever numbers that we have got, apart from the core income, we have also done very well in the non-interest income portion also, which will steadily keep supporting our numbers. So I don't think there will be a pressure on our NIM. Thank you.
your non-interest income, sorry, this net interest income growth has been almost flat actually.
Yes, it is.
So what are you doing to increase the, how will it increase actually?
Only by increasing advances.
Okay, but then you are saying that the advances will be at the lower end of the.
No, if the advances, see, with the advances increase, I told you the average average increase in the advances is about 10%. I'm not looking at the terminal numbers. Terminal numbers, as you say, is looking at about 5.6 or 6%. But the average growth in my numbers are at 10%. So that's a good number. Interest income and recovery also will give me the net interest income. Dummy ledger interest will also come in. So these are the 2 factors which I can take for increasing my net interest income.
And how are you addressing this issue about CASA? CASA has been coming down for a bank of your size. CASA CASA should be much more than what it is now actually.
So CASA is a problem with the industry as a whole. It's not just for Union Bank of India. And if you look at the CASA numbers for the bank, historically we were at 33 to 34%, and we have been maintaining that level. The bank has done a lot of things for increasing the CASA. Like what we have seen is the ETB was the customer base of the ETP was never looked into. So those are the areas that we have looked into that. And I also told you in the very beginning that about 25 to 30 lakh of accounts is what we are opening on regularly in a year, and we are focusing more on increasing a premier customer base. We are also looking at increasing the number of branches to unbanked and other centers where we will get better CASA. So those are the things that we are also looking at. We are looking at increasing the stickiness of the customers, so that they remain with you and they bank with you. There are lot many steps that the bank is taking to maintain the CASA ratio first of all, and to increase the CASA ratio also.
You said that you have allowed some bulk deposits to let go actually.
Yes, sir.
Okay. Can you indicate how much of
Almost 30,000 crores, sir, I let go.
this quarter?
Yes.
And branch, you said 146 you have already opened. So what is the game plan for
We are wanting to open about 220 branches actually. So that was the plan for the year. We opened 146. We will see how soon we can open the remaining branches also. Next year plan is not yet ready. We will indicate to you by when we come for the March results.
Is there any particular, so when you said you let go of certain bulk deposits and that led to a consequential effect on your loan growth, are there any specific sectors where you have looked to deliberately trim down growth within on the loan side?
No.
Or it's across the board?
It is across the board.
It is on the rates only. Which loans is having a very low
Lower.
yielding, we are letting it go actually.
And any plans for fundraising immediate on the debt side?
Debt side, no. We are not. Anything
No.
you have?
We've announced to the exchange that in the next board meeting, which is on Wednesday, tomorrow, we're looking at raising infrastructure bonds and green bonds.
Any amount?
No, that is after the board tomorrow.
Only after the board tomorrow we will be able to tell you. Yeah, infrastructure and green both we will be taking up. So it will be decided in the board meeting tomorrow. So we could probably give you the numbers later. Nothing. As on date, nothing.
And this raising will be for this year?
Let us see, tomorrow let us decide.
you see the interest rates in the market softening because of serious steps that you have taken, which will make your cost of probable fundraise less costly?
This is not only the interest part. There is a lot of incentivization that needs to come in. That is what we spoke to yesterday about this. So there are a lot many things which will help us in the interest rates coming down, or whatever is the interest rate. There are so many factors to it. Now, who wants to buy those bonds? Like infrastructure and green bonds are really something that every one of us have to look at. So there are lot many factors rather than just the interest rate. The ratings of the bank has also gone up. Many of the rating agencies have given us almost a AAA rating. There are many factors which has helped us giving us a good interest rate on the infrastructure and the green bonds.
How big is your green financing portfolio?
ESG. Under that, we have got about 24,000 crores. That's the financing we have done to the ESG. 27,000 crores, sorry. 27,000 crores is what we have given to the this segment. Renewable and to
EV.
Green vehicles, to EV, many things that we have done. Now that we have also come out with a product for greenhousing, that is yet to pick off in a very big way, but we have a product even for green home.
This portfolio has been built up over what period?
Could be about 4 years period.
And what is the outlook like, going ahead? How big
We are getting lot many projects on actually renewables. Renewables we are getting a good numbers. EVs we are getting.
are they price competitive?
They are. They are. They are quite competitive. We are giving it, as I told you, whether if it is MCLR lending, we are going ahead and doing it.
You see further room for the MCLRs to move up? Because that was the only link when EBLR is definitely down. Your situation of
So that is ALCO to decide. It is basing on various factors. Let us see.
Risk you want to tell? Yeah. Our risk will tell it.
factor of MCLR, one big component is the cost of deposit, which goes behind this calculation. So this also depends upon how cost of deposit moves. So if it remains flat, then obviously there is no possibility of increasing MCLR. But if cost of deposit increases, then yes, MCLR. Whatever that, assuming that 9 months there has been so there is a lead and lag effect. So whatever the lag that you have, that has been passed.
It has been taken care. Yeah, it has been passed already. Yes, yes,
That is long back,
completely.
long
Long
back.
back. I think in June quarter itself, the lag was taken care actually.
Ma'am, just one more question. RBI has been cautioning about mule accounts, so has the bank taken any steps in that direction?
See, the RBI Innovation Hub has already come out with something called the Mule Hunter, and many of the banks are participating in that. In fact, we have a separate tool within the bank also called the Operation Vajra, we call it, where we are being able to, take care of the mule accounts in our own little way. But with the RBI's Innovation Hub coming out with this project now, so we will be taking up. We have also signed up for that, and we hope that in a very in a near distance we will be able to put in place those things.
Overall, from a cybersecurity point of view, have you increased spending on IT and by how much?
Yeah, so continuously we are spending on the overall IT, including the cybersecurity component. So, for example, this year our overall budget is around 1,400 crores. Last year also we have spent around 1,000 crores, and this is a continuous upgrade of the entire technology system.
I had a question. There's a lot of market commentary that the large corporates, say private and public sector both, they are now having the capability of raising funds on offshore as well. So, how are you viewing this entire, shift in strategy for the corporates, and how do you think that will affect the corporate loan book profile of the bank?
See, that is there. Always a AA or AAA rated companies will have the capacity to raise the funds abroad, and it is being done on a regular basis. But they also will be looking at the rupee volatility vis-a-vis dollar. Those things also will be factored into account. So whenever we are competitive to the overall rate after the hedging, automatically the market will be there for us actually. Only thing is the capex spending has to happen. If it started happening, then there's no.
Also, just a follow-up on the liquidity measures that were announced yesterday. Do you think that is enough, or do you think there has to be something more that the RBI needs to announce?
See, first of all, what we feel is the demand should pick up for corporate finance. Yes, we are having lot of demand on the retail segment. That's quite good enough. But even in the corporate sector, but it's coming with a pricing part of it. That's a price, that lesser pricing is what you have to pay for if you want to look at corporate. So as of now, the RBI must have done its homework and then only come out with its the numbers for yesterday's liquidity numbers that they have come. We'll just have to wait and watch how the demand is going to pick up now that the budget is going to come up. Don't ask me what is the budget going to be. So I'll tell you whatever is the budget coming up. After that, what is the kind of growth numbers that the economy will be looking at. Based on that, we'll see that the RBI also will come up with some more measures, we hope.
And how do you expect that to impact the credit growth? Are you seeing some pickup?
Credit pickup, is nothing to do with the liquidity stance of the RBI. It only is, I told you, we are looking at the pricing and the rating. If the rating is good and the pricing is good, we go ahead and do the, the product. So, but there's nothing to do with the liquidity. So, I can also see there's enough of liquidity in the market as of now for the growth that all of us are looking at. We'll just wait and watch for another week and then we will know what's going to happen. Thank you.
And there's a lot of money coming into IPOs
Yes.
So just want to understand how your bank is doing on that front, whether you are also giving some kind of IPO financing supporting this kind of.
IPO
No,
financing we are not
we don't
doing.
do that.
We don't do any IPO financing.
Ma'am, Union Bank has a green deposit as well, if I'm not wrong. How are you seeing the traction of that on that?
Green deposit. We have a very small
Yeah,
book on
we have it, but there is not
very
much.
small book, no, on green deposit. How I don't have the numbers with me right now.
Small is very
I'll just give you. I'll just give you the data later. Okay.
So what needs to be done? Because RBI has introduced this green deposit concept. So what do you think needs to be done to actually popularize this product? Actually,
There's a lot of discussions. One is, of course, the interest rate, and then how this green will reduce. It will show very good on the books. Whoever buys the green deposit will show good on their books. And plus, there are a lot of incentivization that needs to come up. Nobody will just buy the green bond. First is, of course, the pricing that you are giving on this green deposit, that will help us in grow, and the appetite of the bank also to really raise these funds, and for what purpose that you want to raise these funds. So you should have both of them very clear with us, and then only we can go ahead and do this. It should be. Will be a market driven kind of numbers.
so the pricing should be lower than the normal deposit.
That is how it is usually. It is always little lower than the current market pricing. Yes.
Ma'am, within credit to NBFCs and HFCs, you increase allocation to private NBFCs this quarter. Is that a deliberate strategy?
No, we have what we have is a approved policy for going up to NBFC for a certain amount, and within which we have got for public and the private. So that stands. That number stands. We have not made any changes to those numbers actually.
Co-lending, how big is your portfolio?
Co-lending is a very small portfolio of about 500 crores.
Why, ma'am, your bank is such a big bank, can't
See, we actually did not have the technology in place, so now we have onboarded two fintechs, and we will be going in an aggressive manner in co-lending also.
how many partnerships
We have tied up with almost 11 partners.
is there any concessional element in that?
In co-lending. No, co-lending, what happens is, both the parties come together and, say this is the interest rate that we will be looking at. It is depending on the kind of dialogue that both of us have, and based on that, the interest rate is fixed.
Ma'am, if there is a rate cut on top of this liquidity injection measure, how will it help your bank?
I don't have to, take bulk deposits, of course. It eases my liquidity. I will not go for bulk deposit. My growth numbers will look very good in that stance. Only thing is, the pricing is what again I have to look at. I can lend. I told you I have totally about 75,000 crores of book available for lending, and we can look at a little more aggressively in lending that portfolio.
What is currently SLR and excess SLR that you're carrying?
About 50,000 crores.
Ma'am, if the rate cut is done, okay, so will the loans that have already been sanctioned, will they not come back to you saying that there's a rate cut and why don't you price it?
This will immediately transcend in the EBLR book actually, but not in the MCLR book. MCLR book will come with a lag. Whenever you are reviewing or renewing that book, that will come back with a lag only after a year or so. So almost my book is 50-50% between the EBLR and the MCLR. So that is how it will be.
Okay, so thank you. If there are no further questions, we'll end our press conference here. Thank you for always coming here and supporting us.